The Ethereum ETF got approved, but what's next? So guys, the Ethereum ETF got approved and everyone expected Ethereum to straight away start pumping towards new all-time highs. But something that a lot of people forgot was the pump that we have seen leading into the event that was already quite pricing in the approval of the Ethereum ETF. Now what happened during the event was very interesting, guys. What are we looking at over here? It's a huge wick to the downside. Now what if I taught you guys is that wicks tend to get filled at least for 50%. That wicks are a draw on liquidity. Especially if a wick that happened as swiftly as this one over here yesterday, where we saw a huge dump in a matter of a 1 minute candle over here, and it got bought up pretty quickly and it reversed the price back up. Now why are these wicks a big draw on liquidity? Because a wick is indicating a fast price movement. And when price is moving as fast as it was yesterday during that news event, smart money and the bigger players inside of this market, they don't have the time to fill their orders. To fill their orders, it takes a lot of time because those orders are so big that they need a whole lot of people selling to them in order for them to be able to buy. So when the price dumped really swiftly last night in a matter of a 1 minute candle, smart money wasn't able to fill their orders, even though that we had a huge liquidity pool resting over here. Smart money wasn't able to fill their orders. So what happens? We put in a wick. Retail traders think that a big wick to the downside and this bullish hammer candlestick, this swing failure pattern, should lead towards more upside. So they start market longing the price of Ethereum over here with their stop loss somewhere halfway through the wick or below the wick over here. Alright, and that is exactly what you don't want to do. Now we know that these wicks, they tend to get filled at least for 50%. So if we take that 50% level, we can see that the 50% wick fill level is aligning approximately with the mid-range. So currently for Ethereum, guys, I have two potential scenarios. But before we dive into the scenarios, when we look at this range, there's something interesting going on. Because we are also in the middle of a potential impulsive wave towards the upside. And we know that the Elliott impulse wave towards the upside consists out of 5 waves. We know that the Elliott wave impulsive move starts after a local liquidity sweep. And that the first wave needs to break structure towards the upside or towards the downside when we are looking at an impulse to the downside. We swept the liquidity, we broke structure towards the upside, we were forming a huge deviation over here beneath the range low, in which this was wave 1, wave 2, wave 3, we are in the middle of a potential wave 4 before getting the 5th and final impulse towards the upside. Now when we count the waves and we measure the target in a little bit, we see 1, 2, 3, potentially 4 and 5. Now, how can we confirm that this is a valid impulse? Let's measure the target of wave 3. We take the trend-based FIB extension, we go from the beginning of wave 1 towards the end of wave 1, back towards the end of wave 2. And what can we see? We can see that the 2.618 and the 1.618 are getting respected as resistance and as support. Now the 1.618 and the 2.618 are the most common targets for wave 3. Now the other reasons why I think that we are looking at a very valid impulse is that wave 2 over here pulled back in towards the discount and it pulled back all the way beneath the 0.618 and the 0.786 fib level. So if we take the Fibonacci retracement levels, we know that wave 2 needs to retrace back at least towards the 0.5 fib level and preferably even towards the golden pocket and the 0.786. Now look how we got that very deep pullback and then we started the third wave. Now what is pivotal for the third wave to be looking at a valid impulse is that the third wave needs to be very impulsive and that the third wave needs to consist out of 5 smaller sub-minute waves. Now, we can see it is very impulsive, exactly what you want to see when we are looking at wave 3. We can also see that we see wave 1, wave 2, wave 3, wave 4, wave 5. We can count 5 sub-minute waves. Once again, wave 2 gives a deep pullback. Wave 3 is very impulsive. Wave 4 and then wave 5 is not that impulsive and only sweeps the high of wave 4 over here. Very common behavior for a bigger wave 3. So that means that I think that we are in a potential wave 4. Now, why is it nice, Confluence, that we are right now entering a wave 4? Because we know that wave 4 is always very slow, very choppy. Often you form a triangle, a falling wedge, or when you are in a downtrend, a rising wedge, or you form a range. And price action is super slow, super choppy, and it wrecks a whole lot of people. Now, do we think that it's a coincidence that we are right now in potential wave 4 exactly after the news event? Obviously not, because after the news event is where so many people are constantly trying to long or short Ethereum, not realizing that we are in the middle of wave 4, which is always very, very impulsive, but still they are continuously looking for longs or shorts, which means that this is the perfect environment for smart money, for the bigger players inside of this market to wreck them in the middle of wave 4. Now, what do we know about wave 4? We know that the target of wave 4 is when we take the Fibonacci retracement tool from the end of wave 2 towards the end of wave 3, is always anywhere in between the 0.236 and the 0.5 Fibonacci level of retracement. We know that wave 4 cannot retrace back towards the end of wave 1. So that is the invalidation for a potential bullish impulsive structure. We also know that we prefer for wave 4 not to tap into the golden pocket. Now, the golden pocket almost perfectly aligns with the end of wave 1, which means in order for Ethereum to remain impulsive towards the upside and to get into that fifth wave towards the upside over here, we know that we do not want to pull back towards the golden pocket. We know that we prefer to hold on to the 0.5 and the 0.382 Fibonacci level of retracement. Now, we can see that we so far bounced from the 0.382. We can see that we have that wick to the downside, which means that I think there's two potential scenarios possible. There's a scenario of filling some more of this wick over here, in which I think if we pull back a little bit more, there's going to be a whole lot of people super bearish and think that we take out the bottom of this wick. That is possible. But I think it's also possible that we are going to front run the bottom of that wick and instead bounce a little higher. It is because of the fact that the liquidity is resting over here. So maybe we just mitigate the liquidity pool a little bit more over here, and then instead of taking out the wick, we reclaim the mid-range and then reverse it back towards the upside. This is scenario 1, in which this wick is a first bigger deviation and we are going to start a second smaller deviation beneath the mid-range. Now, the second scenario, and this one is possible as well, especially when we look at the EMA confluence, is that we are going to take out the bottom of the wick over here, and if we go to the 2-hourly time frame, we can see beautiful EMA alignment right beneath that wick. When we go to the 1-hourly time frame, we can see beautiful 200 EMA alignment right below the wick. And we are going to take out the wick. We are going to test the EMA support. We are going to mitigate the liquidity pool that is resting beneath the wick. Find support over here near the 0.5 and the quarterly level, and then reverse the price back towards the upside. I think the drawn liquidity is still resting near the range high until proven otherwise. We know that after a first smaller deviation, followed by a second bigger deviation of the range low, and an unmitigated liquidity pool around the range high, we know that as long as the range low holds, you technically should be visiting the range high liquidity pool. Now, I think there's either the possibility of a second smaller deviation or a second bigger deviation beneath the mid-range before expanding towards that range high liquidity pool. So what does this tell us? It tells us that we can start looking for longs on Ethereum and altcoins. I am already positioned quite well in 3 altcoins with very nice average entry prices, as you guys know. But if Ethereum is going to give me the confirmation that I'm seeking for, I will be entering a brand new long position on Ethereum early next week as well. Which means that I'm either going to wait for Ethereum to give me confirmation inside of that wick fill, or I'm going to wait for Ethereum to give me confirmation after taking out the bottom of the wick. What is the kind of confirmation that I'm looking for? When this is the liquidity pool that I'm talking about beneath the wick, I'm going to wait for the confirmation where the price is going to visit that liquidity pool. It's going to give a perfect bearish retest. Now, I know that if price would truly be bearish, instead of giving a perfect bearish retest, it would rather consolidate and then expand lower. If it's going to offer me this perfect bearish retest, I know that this price is probably not truly bearish. If it in that case offers another sweep over here, what's going to happen to a lot of people is that they're going to start breakdown shorting with their stop loss above the high, targeting lower levels. That is exactly what I want to see. So upon that low time frame liquidity sweep over here, That's where I'm gonna be interested in longing Ethereum. But I'm not going to limit long Ethereum, obviously. I'm going to wait for one more reclaim and a shift in structure in which we are going to reclaim some key levels over here, in which we are going to shift structure over here back towards the upside. Now that's my long trigger for Ethereum to start seeking for an entry, to start seeking for an execution with my stop loss beneath a local low, targeting the range high and eventually new all-time highs for Ethereum. Guys, do not underestimate the bullishness of this ETF approval long-term on Ethereum. There's going to be massive money flowing into Ethereum, just like there was massive money coming into Bitcoin once that ETF got approved as well. So I'm rather bullish on Ethereum, but I do think that there is probably some more downside fears to come. But who knows, maybe we start pumping from here. I'm well positioned in spot. I'm well positioned in swing longs. I'm patiently waiting for Ethereum to give me some more confirmation to start looking for more swing long positions early next week. Because personally, guys, my system tells me not to open fresh long positions or short positions right before the weekend on a Friday. I rather wait for the weekly candle close and I start looking for executions on Monday morning. I want to thank you guys for watching. If you guys did enjoy today's YouTube video, make sure to smash up the like button and I'll catch you guys on tomorrow's video. Ciao, ciao.